Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 29th, 2016. In this video, I'll talk on a few of the things that I'm watching now, including the broad markets. We'll look at oil, gold. I'll just touch on everything lightly. I had to leave the office yesterday, and wasn't able to make it back in before the close. Most of the post and commentary that I've been making lately has been within the trading room. I haven't put a lot up on the front page of the site, so I'll post this video today for those that don't have access to the trading room. This is the QQQ 60-minute chart. I believe this trade was only posted. It's an unofficial long. I posted in the trading room. After doing an official long off the lows on Wednesday, I went long, hit this price target, the first target up here. Was able to exit my longs, even took some short exposure off that, and then just sat back. And the other day, was it Wednesday, I believe? Yes, went long here on this tag of the bottom of the S2 zone. Yeah, that's Wednesday right there. So when the Qs touched the bottom of this S2 support zone, I was able to go long. And I've micromanaged that. I can take the position higher during the daytime and then reduce down to a overnight position at night. Yesterday, I walked away with, I had to leave the office with some OCO. One cancels the other orders, so I had a stop and a profit target, neither of which were hit. So I ended up, inadvertently, I couldn't make it home before the close, so those orders expired, and I still have that position. And as I posted in the trading room today, what I've done is, as it approached this target here, this downtrend line, I decided, since I am still near-term bullish, looking for more upside, I'm just going to let this position ride today. I'll ratchet stops up as we go, but I am looking for upside, especially now that we've taken out this downtrend line. You can see this sort of this pattern here, a little bit like an ascending broadening wedge pattern, and the next target would be, again, this 103.90 level. If I decide to take any of this current long position home that I have in the Qs over the weekend, I will obviously reduce it down to a comfortable level, because weekends you have an extra night of overnight risk. You have the two weekend days. Anything can happen, and in this market, we're far from out of the woods yet. So as I said, I remain cautiously bullish at this time and have been since last Wednesday's lows. And if we punch up between this 103.90 level, now remember, we've already had that reaction once. I often talk about the initial tag of a support or resistance level, especially target levels that I have, often produce a reaction on the initial tag. Now the second time around, we could punch through there because we've already visited that level. So if my second target is to be hit at 106.25, and that's, again, I put those up last, after we got down here on Wednesday. I think I put those up Wednesday before last. If we're to hit that, we may just go on through that. We could even quite possibly, let's see what happens today, but we could gap above that Monday. Now, what I'll be looking for today is the markets to finish up strong. If we can close up nicely today, so far we're trading up almost 1% in the Qs, you can see up here. That would be bullish, especially close up above 1% today. If I see this current rally that we're having right now get sold off into the close, especially a hard sell-off or reversal, that tells me a lot about the current supply dynamics in the market, and it tells me that there's a lot of trap longs wanting to get out, a lot of pent-up sellers in this market, if you see that profit taking. So depending on how the markets close today will determine whether I take any or all of my position home. I doubt I'll short. Even if we sold off hard into the close, I'll probably just go flat, because I just don't think shorting is very objective here. I'm still, like I said, cautiously bullish and leaning towards a little more upside here. So that's the Qs. There's your targets. If we hit this 103.90 again, we probably get another reaction there. I have that 38.2 fib just above there. And then the 106.25 would be the next target. There's also some resistance here around about 105 that could come into play, and is likely to come into play if the Qs clear this level. So that's enough on the Qs for those trading the SPY. SPY's looking okay so far. We have to take out these reaction highs from earlier this week. Yeah, Wednesday's highs. And we're testing those now. So if we get above Wednesday's highs, we're 191.56, and we're currently at 191.37. You can see we're just above these highs here. That would most likely continue. It'd be a near-term bullish technical event and take us back up to this T1 zone. I'm sorry, T1 zone was here. We already hit that. I mentioned that. We came up, and after going long off the lows on last Wednesday and Wednesday before last, we had several tags of that level. You can see just how beautiful that level was. We had an attempt, a false breakout here, or at least we failed to close solidly above that level, fell back below, hit this support, and now we're moving back up. So my expectation is a move now up to this second target level that I had posted back a week and a half ago. That's the 193.20 would be that target level. And if and when we get there, then I'll most likely have all of my long exposure closed out. I can't tell you yet if I would short. I'd have to look at the charts at that time. But so for now, maintaining that long bias. All right, let's look at a couple other things that are going on today. Oil. Oil's been strong lately. USO. We had a couple entries that got in early here, and within the wedge, I had to I redrew this upper wedge line recently, but this was a wedge overthrow. We had the selling climax. I had pointed all this out at the time that, at the time I referred to it as a potential selling climax, and it looks to be, we can now safely in hindsight say back here at this point, it was a selling climax. And what we had is a wedge overthrow. I often talk about these when you have a bullish falling wedge, as we do in this case, or a bearish rising wedge. When you get an overthrow, so on a falling wedge, the overthrows are to the downside. In other words, opposite in the direction that the wedge is expected to break out. Those can be very powerful events, because what I often notice is you'll snap back within the wedge and then have a very strong reaction. So far that has happened. Now, with that being said, I had this first price target around 975, and we're only trading at 981, so just a hair above it. And you can even see yesterday we failed there at that level. So really, to zoom in at the charts, I could put another line if I wanted to, and probably should, and make that a resistance zone. We have a few reactions here, and so we're banging up against the top of that resistance zone now. Let's call it 94.85. So personally, I took a pot shot short just before I started this video in UWTI, the crude short. I had some long crude positions going in there. I closed out and reversed those today. That's still not an official trade idea on the site, but so far so good. And my guess is we're going to pull back soon here. I'm just looking for a pullback down to this area probably at this point in time. And again, weekend's coming up, so I don't want to go home too long or too short anything in this market right now. I just don't think the risk reward is clearly skewed to one side or the other, meaning bullish, bearish on just about anything that I'm watching. So that's just my take, really kind of off the books, off the record, unofficial trades. Long the equities, long equities right now. Reversed my off book position, or unofficial long in crude just a few minutes ago before doing this video, and looking for a pullback here at about the 938 level. But all in all, so far the charts are constructive on crude. I've made a case for quite a while, longer term charts, these bullish divergences. And we had a very nice trade back here on the long side, and we still have bullish divergences in place. And I also like to use the chart of the WTI WTIC, I believe it is, on stock charts, West Texas Intermediate Term Crude. I think I have a live link to that chart on the site. You can look at that one. But just like USO, what we're looking at here on a weekly time frame, really can bring this line down here now, are these strong bullish divergences. And this tells me that crude is likely in for not just a near-term pop or oversold rally, but we're looking at what I believe to be a bottom. And if you ask me, I think the bottom in crude very likely happened just back here recently on, what was that low? Let me try to hit it with the crosshairs, on the 20th, Wednesday of the 20th. So a little over a week ago. Anyway, so we'll watch and look for an objective pullback. Speaking of pullbacks, I mentioned another one being long on the site recently, the mining stocks, and that I sold the other day. right when we hit right up, I guess, was it right here at this target? Yeah, right at the highs, we hit this resistance level, and I'm looking for a pullback in the miners. This may be all we get here. I haven't had this chart cleaned up. I'll try to put a static chart up with a little fewer trend lines. This one may be confusing. These are just levels that I've watched and traded off of, on an intraday basis. But now this is a support level right here. We've had a few, you can see candlestick wicks or tails, the shadows below that level, but so far that support level's held. It's about 1381. And I'd really like to see just another flush out move and bring the miners back to here, 1350-ish level. There's also support, and I apologize, I'm doing this video live because I've been tied up this morning and yesterday. I hadn't had a lot of time to go through the charts and clean these up. Might also see some support there. So I'm on alert to put an official GDX long trade, maybe a dust short. There's a trend line you can watch. In fact, if I had to really draw that, it would be like that, and we just broken that trend line. Yeah, a lot more reactions on this trend line. So maybe gold pushes back up. Now today it's an interesting day. Let's just look at all the factors that go into my analysis with gold. One of those being the dollar. And this is a US dollar index, or at least the US dollar ETF, UUP, the bullish dollar ETF. It tracks the dollar index. So you have this sort of rising wedge pattern right here, and the dollar's in that right now, threatening, could break out, maybe not. But some of the key components of the dollar are the euro, which is the heaviest weighted component of the dollar index. Similar pattern. This is more of a triangle, almost a symmetrical triangle pattern. And the next breakout of this, I also have horizontal support here at about 108. And you can see that we're testing both those levels right now. That support line, as you can see, has done a pretty good job going back when tested from above and below. Throughout 2015 and so far into 2016. There's been a few moves above and between it, but you also have this uptrend line and this downtrend line. And, I favor an upside resolution of this. In other words, euro up, US dollar down. But we'll have to respect this pattern whichever way it breaks. Now, the big news today was the Bank of Japan going to a negative interest rate environment. Oops, JPY. Sorry, let's find the US dollar. So this is the dollar yen index, meaning the dollar is moving up against the yen today. Now you can see here I've had this support line forever in a day here, this 121, almost the 122 level, and we're coming right up to that now. You can see how it's acted as support at this point. When that support broke, dollar yen tried to cross above it, was rejected. So numerous reactions as I'm going back in time off that level. You can see all the reactions. So a key level on the dollar yen pair. And we also have this uptrend line. You can see here one reaction to several right there. So what's happening is, yes, the dollar is up strong against the yen today because they went from, I think it was a positive quarter point to a negative quarter point. So now they have joined some of the European countries, with negative rates, and that obviously hurts the yen. And where I'm going with all this is I think that's probably it. We're coming up against a pretty solid resistance level, so I think today's move will likely has maybe a little bit more upside here if you look at it. So that would be a little more upside in the dollar against the yen. And by the way, the yen, as I've mentioned in the past, is the second largest component of the US dollar index, right behind the euro. So that's why I watch these two, the euro and the yen, to try to get a gauge on where the dollar goes. So that all comes back into my analysis with gold and GDX. Now let's look at gold. I've talked on gold quite a bit recently. It's been bullish, holding up, even when the miners were selling off, and that's why I became bullish on the miners. We saw that overthrow. Let's go back for those of you that don't know what I'm talking about. That $13 level was a key support level in GDX, and we had that what I call washout or flush out scenario where we broke below very temporarily, briefly, shot back up, very bullish technical event for the miners when you see these false breakdowns or bear traps. That has longer term bullish implications. But as I always say, you want to know where the miners are going, you have to know where the metal's going. So if you get your call on gold and silver right, then you're going to get your ultimately the miners and GDX and Dust Nugget, whatever you're trading, those will follow. So anyway, that's a downtrend line right here on gold that we recently ran into. So gold, I'll tell you what, I'm looking at it trading right now. It's virtually, this is the GLD ETF. It's virtually flat, despite the dollar having a, again, this is UUP. This is a pretty big move in the dollar index, up, over 1% right now, and gold is shrugging that off like it's not even there. So I'm a little concerned. I'm watching it. Gold, if the dollar continues to hold up and rise, and if I'm wrong about the dollar reversing soon, remember I was just looking at the yen chart and the euro and expecting a reversal in the dollar. So if we get that, if my analysis is correct and any upside in the dollar from here is limited, and we start to reverse, the dollar starts to move down soon, especially if it breaks out of those levels like on the euro that I was talking about and UUP chart, then you'll see the gold will likely break out above this downtrend line here, because a falling dollar is bullish for gold, rising dollar is bearish for gold. So right now, like I said, so far, despite the dollar being up strong today, it's if you're long gold or gold bug, it's good to see that gold is shrugging off that strength in the dollar, and maybe the traders see the same things I see. Maybe they see limited upside here in the dollar and think this will be a one-off move with maybe just a little more upside left. So that's that, and but keep in mind, until then, resistance is resistance. So you have the dollar up strong today, gold flat. This wouldn't be an area I'd be going long. In fact, as I mentioned, I just closed out my mining positions the other day, and currently got a little bit of a short position in it in the miners. But that's again not anything I'm adding official right now on the site. Silver had this pattern here, symmetrical triangle. It broke out above it, but we had this resistance level here, and looks like we fell just shy of that. That was defined by that previous reaction high, a few gaps. Really, that was an area that silver was holding support earlier in the year, and we're back testing that pattern right now. You can see where we're at. So a breakout and currently a back test. Now, obviously, if this back test is successful, then silver will continue or start to move back up. And if that is the case, then you'd want to see it take out these previous reaction highs. So let me lower this line here and give you a rough level. I mean, you can put your cursor on those candlesticks and it'll tell you exactly, but let's say 1390. So the bullish case for silver would be to see this back test hold, prices move back up, and then take out the 1390 level. Obviously, bearish would be to see a solid move back within this pattern, and most importantly, a break below the bottom, this uptrend line here. That would be quite bearish for silver, not good for silver or the mining stocks. And if silver does take out that 1390 level, you can see this what I call minor downtrend line. It actually generates off the looks like the July 2014 highs. We have several reactions there, a little false breakout attempt right there. You can see it. They tried to get out but closed right back on the downtrend line. So this is a pretty solid target. So if we take out 1390, I would expect a reaction here on this trend line. And then ultimately I have this long-term downtrend line. This comes off the 2011 highs. You can't even see it on this chart. This is the key downtrend line in silver. So that's why I'm watching when we go back. This is a 10-year weekly chart here. Go back to the daily chart. You can see that downtrend line comes in quite a bit overhead. So to draw it out here, show you my current scenario in silver would be, see this back test hold. Oh, it's a pretty big arrow. Pull back, maybe a minor reaction there. And I'm not drawing this to scale. I should use smaller arrows. Then a move back up there. An initial reaction, a little pullback or a consolidation on that trend line. Possibly we could punch through it, and then if we do, Yeah, there'll be targets along the way, such as this level here. I have resistance levels. I don't expect it to go straight up. There'll be some zigs and zags, but that's where silver would likely be headed to. And remember, GDX, even though it's the gold miners ETF, a lot of those companies, you know, pull a lot of silver out of the ground as well. So that's why I watch gold and silver. I'll just touch lightly on the agriculture commodities, corn, a lot of the grains and beans that I've talked about recently. Corn's kind of eked above that downtrend line, but as I mentioned, had this resistance here. So I'm just watching these for now. We really need to see a solid breakout. I want to see a lot of these break out. Wheat's got a little work to do, as I mentioned. Soybean has some work to do. It's tried and failed to break out. So these are still on my radar. Oh, there's sugar. I hadn't checked that. I didn't look at that yesterday. It looks like it fell out of that trading range I talked about. So that's bearish near term for sugar, SGG. So unless I can quickly get back up above this level on SGG, that doesn't look good. But I mentioned this, the next objective entry would be a breakout of the upside of that trading range. And I also mentioned the other day that if you were an aggressive trader, you could go long here at the bottom with a stop not too far below. But if you did that, then you should be stopped out at this point, because yesterday you could have waited till see how it closed, or if it regained some of those losses. It looked like with that red stick, it closed near the lows or closed down on the day. That's actually 2 days ago. That must have broken out on, was that Tuesday? No, Wednesday. Okay, yeah, I guess that was, I hadn't looked at SGG since then. I don't have any price alerts set on it at this time. So now 3 days of selling, or 2 follow-up days since the breakdown. So like I said, if you went long at the bottom of that one, you probably should stopped out at this point. It doesn't look good. So now keep an eye on it. Sometimes you have these false breakdowns, and if you'd want to see a very quick and impulsive move back up above that level, and I'm talking nearly immediate. Today I'm doing this video early Friday morning, so you'd want to see that happen by no later than first thing next week. So, all right, I'll leave it there. This video's gone on long enough. So as I said, just to summarize it, I'm near term cautiously bullish on U.S. equities, keeping things light there. Near term bearish, I think a little more downside. I'd like to see a little more downside on the miners to recycle back into those long positions that I closed out recently, and quite likely add an official trade idea. I plan to do separate videos on the mining sector soon. There's a lot of individual stocks that really stand out to me right now, and as well as the energy sector. There's a lot to look at there, but as I said, this run up since that fake out in USO, it kind of happened very fast, swift. I don't think it's objective to add here. I'm looking, as I said, for a near term pullback today, or maybe heading into next week, and then maybe we'll, just like the miners, maybe we'll get an objective entry. But again, I have so many individual charts, individual stocks I'd like to look at, so that I may cover in a separate video here over the weekend. All right, this has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.